All right, you're welcome. You're welcome to this training. Initially, I scheduled to do a market analysis or a weekly market outlook, but because of the time we are, the period we are, rather than looking at the market, I would rather want to use it to do a training for those who are present. So if you're just starting, what you're seeing is trading view. So most times, people who are just coming in may not really be making use of trading view, but trading view is a site or a platform that professional traders actually use for the analysis. Here you don't place trades, here, but this is where you actually do your analysis, because just like I keep saying, trading is a skill. So this is where you hone your skill, where you do your analysis, then you go, when you see opportunity, then you go to your broker. So in our previous training, I actually did mention that you can open up a free demo, a free account. All you just need is an email address and a password, and you have trading view. So what you are also seeing is candlesticks, and candlesticks are simply price, a way price is being represented. It's just a way of representing price. But outside the candles, there are other ways that price can be represented. We have bars, we have line charts, and all of that. But candlestick is more popular, and it is just what you need. People, for those who are just coming in, when you're coming in, it's as if there are a lot of things that you need to actually do your analysis. But no, just a candle is enough. Is enough because a candle gives you open price, a closing price, a high, and a low. And that is just all you need. So if you are able to read that, interpret the low, the high, the low, the open, and the close of a candle, then you are actually on your way to becoming a good technical analyst, because your ability to read these charts, that's what actually makes you that's what makes you a good trader. You should be able to read and interpret what price is actually telling you based on the chart. Like in our previous classes, after mentioning that, okay, you focus on, so like the candles, this is where sometimes new traders miss it. Now the candles I am looking at currently is a daily candle. It means that each of these candles that you're seeing takes 1 day to form. It's an entire day to form. It takes an entire day to form. So you want, as you're looking at price, you want to, one, recognize the time frame you are looking at it from. If you like a daily candle, since it takes a whole day for this candle to form, so it means that, let's say on Friday, this was the entire candle that formed. This was, we have price close here on Mr. Esco there, please, can you mute yourself so that you don't disturb the class here? All right, so just looking at looking at it, this was where price closed on Thursday. So on Friday, price started here. It didn't make a significant high at all. It just went above, just a little above the opening price, and then it dropped. Price dropped. This was the highest point. This was the lowest point it got. This was the low, and this was where it closed. So, but this is what you're looking at is on the daily chart. On the daily, what if I now I have shifted from the daily to the 4 hour. The 4 hour time frame now. That means that each of these candles take 4 hours to form. So if we are looking at probability, we see that the candle on a daily chart, because it is a longer period, a daily, is more stronger than that on a 4 hour. The same way the 4 hour candle is stronger than the candle you are looking at in your 1 hour. So one of the things that new traders struggle in is when it comes to looking at the market using multiple time frame. Being able to, so new traders find it difficult. They don't know, where will I base my trade on? That is usually where they find it very confusing to know, are you trading from the daily, are you trading from the 4 hour, are you trading from the 1 hour, or even the 1 minute? Because most times new traders are, because of activity. So you see them, they are usually in the lower time frame, like let's say 15 minutes or 5 minutes. Now, let me, if we are, if you are in a higher time frame and you are looking at price, let me, this is what you will do. Let's say you are looking at price from the daily. Like I mentioned earlier, the price closed this level on Thursday. On Friday, it started the same level where it closed. Now, how will I know if I'm just looking at the daily candle or looking at any candle? So how will I know if price is going to go higher or it is going to go lower? How you are going to know if you're just looking at, for a beginner, you want to begin to train your eyes, because your eyes is actually your best indicator. Your eyes is your best indicator. So if on Thursday, let's say on Thursday, price closed here, and on Friday I'm looking at this candle. Let me say during the Asian session usually happens while we are still asleep. By the time we wake up, we see the market is transiting between the Asia session down to the London session. So if I'm looking at a buy for this market, because on Thursday it bought, the market went higher. So if I am expecting that this price is going to go higher, this candle is going to go higher, this is what I want to see. I want to see, probably during the Asian session, I want to see this candle. When market opened, I want to see it take out this high. If it takes out this high, here, that means it has given me an indication that price is going to go higher. So, but in this case, if when the market opened during the Asian market, Asian session, price started dropping, as long as it has not taken out the high, that means we are not sure if the market is going to take out, if the market is going to buy. Now, if a candle also takes out, if a candle takes out the low, it means that it is going to sell. Now look at As an example, see when price formed this, when we had this, the formation of these candles here, this one did not take out. Yeah, it actually took out the, it took out the low of this candle. It took out the low, but it did not take out the high. See the next day, this one took out the low, didn't take out the high. See the next day, price dropped. This one took out the low, didn't take out the high, and see the result. So that is how you want to start training your eyes to actually know how to read. Is a good way to start for those who are just coming up. So you want to begin to look at the high, the low, the open, and the close of the candles. So like I mentioned earlier, you also want to base your analysis. Your analysis should be coming from a higher time frame. For example, let's say we are looking at support and resistance levels. Support and resistance levels. Now, if I am looking at these levels here as a support and resistance level, and these are levels I expect the markets to react on. And let's say I placed this horizontal line here, horizontal line on this level, and then I also do the same. I also do the same here. So here I have created a kind of a range. I've created a trading range formed by this high and this low. Now, if I am going so I've created a kind of a trading range formed by this high and this low. If I am going lower, if I come to a lower time frame, I'm now in 4-hour time frame. Anytime price, any level that if I'm going lower, even if price returns back to this level I marked out in the higher time frame, I know that it was from my higher time frame that I took out these two levels. So when price, anytime price approaches either this high or this low, I know that I'm expecting a reaction. I'm expecting a reaction. I'm expecting the market to respect those levels because they are higher time frame levels. So for a startup, the way you actually start honing your technical skills. So you want to start from higher time frame. When your levels, your key levels should be higher time frame levels, starting from the monthly. Starting from the monthly. So if I have this level here, these two levels as my range in the monthly. So when I come lower, I also want to look out for levels that the market respected on the, so I've moved lower. The lower now is the weekly. It takes 1 week, 7 days for any of these candles to form. So the level I saw in the weekly is this point here for the weekly. Then as you're coming lower to your daily time frame, so you also want to pick out key levels, points where the market turned. So now the monthly, weekly, and daily are higher time frame levels. there are higher time frame levels where you should base your analysis on. So I've gotten levels here from this daily, monthly, weekly, and the daily levels. So the next thing now, as I'm coming down to lower time frame now, we want to now see how the market can start reacting on those levels. So you can the 4 hour can also pick out levels on your 4 hour. So what we've just done, so now we are now looking at how the market will react at these key levels. So if you are able to base your trading on these key levels, it increases your probability. It gives you high probability. So for instance, let's say we are we have been able to identify this high here. We have a low here, and we also have a point where the market formed this impulse here. So if we are looking at taking advantage, maybe entering a buy or a sell for this pair, we can use our fib to measure based on this impulse to measure how far. And like I explained in my previous class, that if you're using your fib, if you're using your fib, you want to where you have an impulse formed between this low and this high. If you're watching the retracement, that you want to see it come below your 50, this is your 50 level. So anything within this point, anything between these levels, your 60 to your 75 to your 78 level. So if we are looking at a buy, if we were looking at a buy based on this move here, using the fib to measure the retracement, would have expected it to come below. So for beginners, you can actually use the Fibonacci. Use your Fibonacci, swing it from the high, the low, down to the high, and then watch it retrace down to these key levels here. These levels here, your 62, 70, or 79 retracement level are good levels that you can look at placing trades. So what we have actually succeeded in doing, this you can be watching, you can start working on, is being able to pick out levels, key levels in the market. You shouldn't be your key levels shouldn't be on lower time frame. Lower time frames is actually not giving you the direction of the market. You don't get the direction of the market from lower time frame. You get the direction of the market from higher time frame. Higher time frames tells you whether the market is buying, whether it is selling, or whether it is consolidating. So if you are able to base your analysis from the monthly, the weekly, the daily, get your key levels from this higher time frame, then as you're going into the lower time frame. For example, on the monthly, we are looking at here now, we see that each of these candles takes one full month to form. So for the past two, like last month, throughout last month, the market dropped. But for a very long time, throughout the year, the market has been flying up, 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 up. But recently, within last month and even the beginning of this month, what I explained earlier, that when price takes out to the low, you see that it tells us that it's an indication that that the market is going to go lower. So for the past, for last month and this month, the market has been going down. So when you, as you're now coming to lower time frame, you already have an idea that the market is selling. And the market is selling. So for when you come to your daily, so the same thing. So that higher time frame has given you an idea of what is actually happening in the market, that the market is selling. It is not, it is currently not buying. That's why we have this range between here and here. So as long as price is as long as price is inside this range formed by this low and this high, that's it. Please mute yourself. All right. So as long as price is inside the low, this high and the low, it means we are in a seller's market. So it gives, so as you're going in as you're moving lower to lower time frames, you want to recognize that fact that the market is actually selling. Is selling at the moment. So as if you are in your 1 hour, should you be looking for buys? No, you want to start looking for selling opportunity, not until when price takes out those key levels that changes the structure of the market. So your ability to actually know when there is a change in market structure will also assist you when it comes to buyers. For example, from this range we are looking at here, range formed by this high and this low, we see that price has just been reacting inside of this level, inside of the range. So if we swing our fib here, our fib, so we see that price is within levels that you should, based on the range formed between this high and this low, you see that price is within levels that you should actually be looking for a sell, not a buy. So if you start training your eyes like this, it will help you. So what has helped us to be able to know that at this point we should be looking for opportunities to sell the market? It is because of the guidance we have gotten from our higher time frame. Our higher time frame currently is buying. And looking at it from what we have discussed in our previous sections, we see that price made this long impulsive move. He made this long impulsive move. So normally when we have a very big impulse like this, we expect that the market should retrace. It should retrace. It should make a retracement, and that is what is currently happening. So that is why currently we are saying that why we had a very long buy, a buy that started from December, or let's say January 2021, down to November, down to October 2022, a very long buy. But now, since we've had this impulse, we're expecting a we are expecting a pullback, and that is what is happening. That's what is actually happening, because we, for this market to continue to buy, it has, that retracement has to come, and it is that retracement that is coming. So you see how we are merging our knowledge of what is happening in the market to assist us, to actually put us in a position where we now know whether we should be buying or we should be selling. So number one, we already had this impulse. We know that for the market to continue, that there should be a retracement. So at least the least retracement we should get should be, it should retrace at least to the 50 level. But it is possible that over a long period we will see it retrace up to even these levels here, if before we now get a continuation of the market. So these are pieces that you actually put together to help you analyze it. So if you, but one thing is, it doesn't, when it comes to looking at direction. So if just the same way I am doing on this monthly time frame now, if I am also looking at the daily time frame, I am also going to apply the same thing. But the thing now is that the monthly has given me, and I've gotten an idea of what I am expecting from the market. I am expecting a retracement from this market, and the retracement has already started. It has already started. So, but going down now, as you're now going lower, we see that here also we've now had an impulse also, and after this impulse, we are also expecting a retracement. There should be a retracement before the market will continue. So these things actually takes time to begin to piece together. But you can start from, you can actually start from uh, you can start from point A to, before you get to point B to point C, and before you even get to point Z. So what do you want to take out from our section today? You want to begin to train your eyes at looking at the candles, looking at the behaviors of the candle. So when you see any candle, it doesn't matter the time frame, you want to see, did it take out the previous high, did it take out the previous low, did it take out what was the open price, what was the low. So that's a good way to start. And then your higher, you want to also now base your analysis on the higher time frame. So if you want to look at key levels on the higher time frame. So when you pick out key levels on the higher time frame, as you're going, so it will tell you what the market is actually doing, whether it is buying or, so if it is buying on the higher time frame, so you want to base your analysis, or your trades should be based on those higher time frame. So if it is selling, so the same thing also happens. So as you're now coming to the lower time frames, you already know what is happening on the higher time frame. So that will now guide you on what to do on the lower time frame. So just like you're looking at the high, the open, the close, the high and the low of each candle, you also want to be able to pick out turning points in the market from your higher time frame, and then you see how the market reacts at these levels when you are at your lower time frame. So any question in few minutes? Let's take some few questions. We are wrapping up the class in about 2 minutes or so. The class, we are wrapping it up in about 2 minutes. So do we have any quick question you want to ask based on what we have discussed? Any question? Okay, so if there is no question, so for those of us who are starting up, who are just starting out, so please, I'm advising you, don't put your life funds at risk when you don't know what you're doing. You're just creating problems for yourself. So don't put your life funds at risk, because you don't know what you're doing. So it is better you should be able to know what you're doing before you start putting your life funds. So those funds can actually do something for you. So don't expect that you want to go and trade and make money, and no, you will not make money, because you don't know what you're doing. So if you're starting out, focus on piecing this puzzle together. So Trading is highly technical. It is highly technical. It's not something you just jump in and then you expect that you should be making a kill in the market. Rather, the market is going to the market is going to give you punch. So focus on the skill first. The skill first. When you have the skill, then when you know what you're doing, then you can now begin to make the kill. So since we don't have a question, this is where we are going to wrap up this section. Thank you for joining. So we want to look out for more training that we are going to give out in the group. Once again, thank you. Good night.
Thank you so much, sir.
You're welcome.